Morning all, last day of the week. It is Friday 21st of January. I'm recording this very early because it's actually the middle of the night in the UK, but I'm travelling back from Thailand to the UK, so I've got to get everything done before I leave. I'm looking at the S&P. This has obviously been my focus of the week, as you know if you've followed all my videos. I was looking for the market to collapse. Let's just have a quick recap in case you didn't watch the videos during the week. So we had the head and shoulders pattern quite clearly completing with a break of the neckline. Where is my cursor? There it is. There's a break of the neckline. Just so technically easy, really. I say arrogantly and confidently. But left shoulder, head, right shoulder, break of the neckline. You can see all these lines here are my short positions that I jumped into. I got into several. I just kept selling and selling and selling. Every time we rallied back to the neckline, I sold it. So I sold it here. We broke, and then I didn't expect it to bounce back yesterday, but it did, and I sold some more. Fortunately, that worked. The market has collapsed. We're sitting near the lows. That's just from the 4-hour chart to show you the pattern, in case you didn't get my video earlier in the week. If you did get my video earlier in the week, then I'm hoping you've made significant profits, because obviously there's the weekly chart, and we're really moving down quite significantly with no end in sight to that move as I speak. Nice, let me just show you here. Nice, do you remember I told you about this diverging stochastic? So you see the second peak here is lower than the first peak here, which of course is different to the price, where the second peak was actually a new all-time high for the S&P and then dumped. Now that divergence also gave me some confidence to get into shorts and hold on to short positions, so I'm pretty pleased with all of that. On the daily chart, now this is going to be the focus for me now. We're getting into oversold territory, but we're not particularly oversold yet, so I'm not concerned about having a short position. The only thing is we are testing the red 200-day moving average. Now, that can be a good support level, especially in a bull market. So that kind of is going to tell us, are we still in a bull market, or are we starting to see something more important to the downside? I'm going to just put my fibs on here as I talk to you. I'm going to take the second one from here, just above the 61.8, and project it up to the swing high, the all-time high. Now, the reason I've done that is because my second set of fibs tie in quite nicely with that 200-day moving average. So that is a good support level. Now, what do I want to do here? I want to blow this up a little bit so you can see it. There we go. It is a good support level. And we are testing it and we are holding it. Now, it is entirely possible that this will be a decent low. Who knows? We could even rally 150 points and we could retest that resistance, which is around yesterday's high. We could chop around here for a little while in that 150 pip range or 150 point range, I should say. I'd be very surprised if we got back above this resistance. And I personally think that eventually we will break lower. But that, thinking is different to actually the market or the price telling us what to do. Now, here's another scenario that could develop. We could chop around a little bit and build a second head and shoulders pattern. You often get head and shoulders patterns within head and shoulders patterns, and this leads to very significant moves to the downside. Now, what we could have here, therefore, would be a left shoulder here, then this would be the head, and then we'd get something like this building a right shoulder, and then when we finally break 44.50, that would be yet another important sell signal, and that would indicate another move of maybe 400 points to the downside. So we could be looking at sort of 44, well, we could be looking at this 50% fib level right here. All very possible. I'm just speculating. Oops, there we go. All very possible. I'm speculating at the moment, obviously, but I've been doing this 35 years, and this is the kind of thing that I'm used to seeing. So, could be interesting. If you are short, you've done really well. You've made 150 points. Probably worth taking at least some of your profit off the table, at least half, in case we do have that rally back, and then you'll have some ammunition to get short again, maybe if we get up to 45.90, 46.00. The right shoulder doesn't have to be level with the left shoulder. So anyway, right, leaving that alone, that's my theory for the S&P perhaps. Now, pretty early on, I was warning that the Nasdaq was building something of a negative pattern, pretty much just once we'd hit that low, and then this high was lower than the high there, I was quite keen to point that out and suggest that the Nasdaq was building a short-term trend and we should go lower. So the Nasdaq, let's go back to the daily chart. The Nasdaq has broken the 50, the 100 and the 200-day moving average. Now looks like we're also breaking this low, which goes back to, let me get some crosshairs up here and get all the prices and the dates correct. We have a low for October down here at around 14,800, 14,400, 14,350. So that, I would suggest, is perhaps a minor support level for the cash index. I'd be very surprised if that holds, if I'm honest with you. I think that we have got some moves to the downside coming. Now, this looks like some support. 50-week moving average. Well, it's worth paying attention to. Let's put some Fibonacci levels on that weekly chart. See if any of them tie in well with that level. Yeah, kinda. So look how nicely we bounced off that 200-week moving average down here back in April 2020. Anyway, now we're testing 50-week moving average, and we do have some fib support a little bit lower, around 14,400. So yeah, S&P and the Nasdaq are hitting support levels. Now before, bulls were extremely keen to jump in anytime we got anywhere near a support level through that bull market. Bulls were just on the sidelines and aggressively buying the market back up, very, very aggressively. So today will be quite telling. Are we still in a bull trend? Will we find strong buyers at these levels? And if we do, will we form, for example, a right shoulder to a head and shoulders pattern in the S&P? And look at this. The Nasdaq could also do the same thing if we bounce. There we go. This could indeed be a left shoulder. Nice big one. Oh, hang on, I'm trying to draw something here. Nice big left shoulder here. Oh, what have I done? What have I done? Right, this is what I'm trying to do. Left shoulder, quite flat. Head, also made up of a double top, really, because we've got that peak here, and we've got that peak here, which I talked about being a potential double top in earlier videos. Nice break below that neckline, of course. That was a nice little indication that the market would turn lower. Now, then, do we bounce off this and then again form a right shoulder for a very much more significant topping pattern, and then we see the market plunge significantly? Or do we just break that? Is there enough momentum to the downside just for this to break? No head and shoulders pattern, but we collapse further today. I mean, at the moment, we've had a big move to the downside and no indication whatsoever that the market is ready to bounce. So maybe the fundamentals are finally catching up with what could be described as an overvalued market, and we need a decent correction. That's my guidance for today, really. We really are at very crucial support levels for the Nasdaq and the S&P, and even if we hold them, I do wonder whether we would only build a right shoulder to a head and shoulders pattern and then have a break below that neckline maybe next month. So quite interesting times. I'm going to leave that with you. I'm not going to bother looking at the Forex markets or gold. They're mostly only trading sideways. There's really only scalping opportunities in there. I'll leave that for you to look at your hourly charts and figure out where you want to scalp. Or if you're a subscriber, then of course you will have your reports and they will be providing you with those scalping levels. Okay, that's it. Hope that all works for you and hope that's helpful. If not, do give me a shout and I'll see what I can do to help you if you've got any questions.